Mode.
Hey everybody, welcome to this free edition of our Trader Use Group Weekly Roundup. This is for the trading week ending September the 18th, 2020. Hey everybody, I'm Preston Brent. Thanks for tuning in. Remember, don't be a rat brain trader. You want to be the red striped zebra. Stand out from the crowd. This week's theme really is where to next. Well, we've had a really interesting series of weeks over the past few weeks. Seen a lot of profit taking pullbacks. Volatility's been acting kind of funny. This past week, we got the Fed two-day policy meeting, and they basically expect official short-term rates to remain near zero through 2023. All right. And they believe the correction, the size of the economic correction for 2020, they revised it from being down 6.5% to 3.7. They're still fairly dovish, but it kind of set the tempo midweek this past week for the markets, which caused a little bit more of a sell-off. And we're seeing a little bit of weakness in the economic data as well. We're seeing core retail sales. It fell about 10 basis points in August, and they reduced the previous July's gains back just a little bit. We're seeing the weekly continuing jobless claims hitting, although they're kind of hitting new pandemic lows, they're still kind of elevated. And we're seeing some housing starts pull back just a little bit. And if we kind of go around the planet and take a look, we saw the Bank of England, they left their policy measures unchanged. They're going to have some Brexit issues. It looks like that's what's teeing up. And the Bank of England surprised everybody by saying they could go to negative rates if it warrants. So that would be just another country over in Europe that moves below zero for interest rates. And then over in the Asia Pacific area, we had Shahidi Suga. He took over for Shinzo Abe, prime minister, but not much expected there because he's looking at keeping things the same. Although we are seeing growth in China. I'll show you the charts. Their retail sales were up about 50 basis points in August from a year ago. We're seeing growth in their industrial production, which is kind of a proxy for their GDP. So it rose a better than expected, a little over 5.5% in the month of August, right? And in fact, midweek this past week, we saw the OECD, that would be the Organization for Economic Cooperation and Development. They raised their 2020 growth outlook for China from a contraction of 3.7% to in the green 1.8%. Okay, China is really the only country expected to see positive economic growth this year, assuming they keep it running at the rate that they're running, compared to all other G20 countries. All right. Now, we are seeing some trade tensions in the U.S. and China, as evidenced by this. I mean, we read about TikTok and WeChat that's going to go off the app stores here this Sunday, but we're also seeing the economic output of that. Two-way capital flows between the U.S. and China sank to a 9-year low. So, the bilateral relations here is getting worse. So it's no doubt that China really is trying to back Biden, and they're playing their reindeer games and their monkey games in the elections, as I'm sure Russia will be too. So all in all, it's going to be really an interesting Q4 as we round out Q3. Now, what you're seeing on the screen here is a weekly chart of a customized index that I created of really the FANGs. That would be at least what I've included in there. Be Microsoft, Facebook, Apple, Netflix, Google, Amazon, and I've adjusted it to reflect the stock splits that we saw with Apple. And you can see on this weekly chart, you can just see how it's been moving higher and higher. But we got a bit ahead of ourselves. So this pullback to me is, I'm not that concerned about it, to be honest. You can see when we broke out of this upside channel here, the end of April going into July, it just went to the moon. I mean, it just went straight up like that. And as you guys know, or at least especially you guys been trading for a while, know markets don't do this except for brief periods of time, and then it kind of comes back to a more normalized growth pattern. And you can see here this channel right in that area there. It put us around 17,000 for this customized index. So the number itself is not that important as much as just the pullback that we're seeing. Now, this is a weekly chart. So if I were to just kind of zoom in just a little bit, and let's make it a daily chart here, and let me just do that for you guys. And when we come into the daily, you can see here just this big move up, and then we broke this trend line. And I could see us coming back to this the upper boundary of this upsloping channel here. So that does seem to indicate that we still have some more downside left in the tech sector, primarily in the FANGs, and that's kind of dragging everybody else down because it was just, it's such a large cap weight of the S&P, almost 23% of the S&P, the FANGs. So when they move, the rest of the market's going to move with it, even though I am seeing some cross collateralization of assets. I'm seeing some reallocation into industrials and into some value. So we're seeing some of that, but this is kind of to be expected. All right. So I've been telling our members, just be ready for it, expect it. Now, what I said about China being one of the few, if only G20 countries that makes it into the green this year, the proxy for China is Asher. And if we look at the chart here, you can see we're near the 2020 highs over the 50 EMA daily chart. I would expect this to move higher for China. Now we are getting set up for these divergences here, so it may chop around as we go through Q4. A big part of this is going to be who's elected on in about 6 weeks from now. In 40 some odd days, the big election. So I don't see a lot of money committed, bull or bear, until we get through these elections. Now, for our members in another week or so, we're going to go through a list of stocks and sectors you want to be long if the Republicans win, and long if the Dems win. So, we got to make money out of it, no matter who your personal favorite is. We want to be able to trade on the right side of the markets for this. So this is kind of what I'm seeing. Now, if we come over here and we look at the Russell, these are the Russell futures, and you can see that we're still below. If I were to put on here, you can see we're still in the red because we're below the 2019 close. And there's the 2020 high, and the all-time high for the Russell's 2018. Now we've made all-time highs in the S&P and in Nasdaq, and they're the only two in the green this year so far for the U.S. But you can see where we're sitting with the rut. And if we come over to the Dow, you can see the Dow has moved back into the red again. These are the Dow futures. And you can see we're below the 2019 close right here. Here's the all-time high and the 2020 high. We're not there. We didn't get there yet. All right. So we're still below the pre-pandemic move. And of course, if we look at NASDAQ, let's look at the NASDAQ composite. On the NASDAQ composite, you can see we've pulled back to the 23.6 fib node. We're below the 50 EMA. Okay. So when I blow it up, you can see here, we're sitting right on that node. All right. I do believe a common pullback point for this is going to be south of this point, probably around the 10,000 zone. That to me would be a nice area that I would see more buyers willing to come in. Now, if we look at the NASDAQ 100 futures, which are the 100 largest technology companies in NASDAQ, you'll see here that we're down a little bit lower than that. We're well below the 50 EMA. I do believe the next stop is going to be around the 10,000 zone. All right, we're well north of the 2019 closing price. But if we look at the pullback and just see where are we from a pullback perspective, and we'll just look at the ruler. Let me just put that on here so that you guys can just get an approximation. Right now we are about 12% from the highs. So we're at about a 12% pullback, 12.2% pullback. And I still think we got a little bit further to go. I don't think we're going to go into a 20%. If we were to say what would put us in a bear market on NASDAQ 100 futures, that would put us right around, let's just take it down to 20%, right around this level here, okay? Right around 9,900. In that level. And even if we do a 20% pullback and move into a bear market, we're still well north of the opening price here, okay? Because NASDAQ has just had a really strong year. I don't think we're going to get a 20%, but I do see at least another 2 to 5% lower, okay? Now, anything can happen with these elections coming up. I mean, there's a lot of real risk in the markets, so you've got to understand that. And I'll talk about volatility in a minute. And if we look at the E-mini S&P 500 futures, again, We're sitting just below the 50 EMA. We're closer to the 2019 close, which would mean we move into the red for the year. You can see the 23.6 fib node at 32.53. I've been telling our members that the 3200 is the break or no break for us to the downside. The 200 EMA is sitting at 31.47. But the markets are just fairly fundamentally weak right now. I've told our members be careful of a bull trap. We had a bull trap here coming into September the 11th. It moved back up and then it rolled right back over and is testing the lows again. So that tells me that there's still a higher probability of more downside than upside in the markets. Now let's just kind of come down here and look at vol for a minute. Let me show you guys something. Volatility has been coming down over the past couple of days along with the markets. It was very strange. The markets were moving higher as we moved through the end of August, and the VIX was moving higher, which was very unusual. It's unusual to have a positive correlation between the VIX and the S&P. Then the S&P started pulling back, and so did the VIX. So the VIX is acting kind of strange at this point in time. And I suspect what's happening is we had a moment in time this past week where the back month vol skew was in a backwardation, which meant the October volatility was higher than the November volatility, and now it's switched back around again. And all of this is due to the unknown presidential outcome. And vol is bid up higher in October. You've got to be careful here. And even though the election until early November, the volatility futures expires the third week in October. So by the time you move in the November series, the election's already over. But if we don't have a clear winner, like a runaway, then we're going to have 2 or 3 weeks of legal challenges. And I will point out to everybody, the last time that happened in the United States, it was Gore and Bush. Now, Bush won, but it took 3.5 weeks to declare a winner, and it had to go up to the Supreme Court. And when it did that, the S&P pulled back 6.5%. This time we had another wrench where we had Ruth Bader Ginsburg on our Supreme Court pass away yesterday evening. So now it makes it an even court, which means the conservatives and the liberals are roughly 4 and 4. So we don't have, it's more even. So what that means is if it goes up to a divided court and it's a no, it's split 4-4, that throws more unknown into the market. So I suspect volatility is going to probably stay elevated, certainly through the election. So guys and gals, just be very careful on how we're treading here. If we look at the front month skew, you can see right now the front month skew is in the green, so it's in a backwardation. We got a normalized skew, and if we look at the back month skew is the October-November series, and see it was in the red until Thursday of this week, and then it moved back into the green. But being into the red in the back month skew, but being in the green in the front month skew is just very abnormal. All of this because of the presidential election. Now, right now, the volatility is saying this pullback is merely a profit-taking mode. That's all it is. And that's all I see as well. And even though we've pulled back nicely in the NASDAQ futures, so if we come back and take a look at NASDAQ futures here, and I put it on a weekly chart like this, you can see we've had 3 red candles, just boom, boom, boom. Okay. And I suspect we're going to probably run sideways but we're not, I don't think we're done coming back down. Okay. I still think we have a little bit more downside left in the chart. But as you can see here, this is a classic Elliott wave 3-4-5 pattern. The 4 leg is typically the profit taking leg. The pullback is normally around 23.6 to 38, a little over 38% in the fib node, which means we can come a little bit lower, possibly down to 10.2. I don't think we're going to go much lower than 10, and then we're going to rip back up again. Okay, so that's at least that's the pattern. So near term, a little bit more downside weakness is what I'm seeing. If we come over and look at treasuries, if we look at the bond market, You can see here the bonds are just steadily moving down just a little bit. Interest rates are slowly moving up, but very slow. And as I've been telling our members, this is a perfect setup for some strategies that we use in the bond market. Trading options on bonds, there's just some perfect strategies here where you can take them. Same thing with TLT. Members, I'll go through that again with you this Sunday evening. And of course, if we look at interest rates, we look at the 10-year, same thing. I mean, we're in this block here. It's a Fed controlled block, anywhere from around 50 basis points up to about 75 basis points roughly, and that's kind of where we're sitting. I don't think we're going to get outside of this range near term. Okay. If anything, the risk could be more to the downside near term as we see the risk of a higher volatility environment as we approach the U.S. presidential elections. Okay. If we look at the dollar, now the dollar it cannot, as I've told you guys, it is every rally is sold off, and we're making a succeeding series of lower lows and lower highs. We did take out the prior pivot high, so it looks like it wants to change polarity, but not by much. All right, I've got a target here of about 91.15. That's what I'm looking for in the US dollar. And we'll see where this thing goes, but this was the big overhead resistance R1 zone for the dollar. Likewise, the trade, if you can't trade the dollar, would be in the euro, because it would be just the opposite, right? So the euro has been pulling back and just kind of running steady. So I was suggesting some bull put spreads as credit spreads in the euro or in FXE. Now, if we look at gold, gold had a nice day on Friday, but gold broke this trend line, right? This upsloping trend line. You can see where we go all the way back here with gold. We pull back up here like this. We broke it. Now we're running sideways. I think we're going to be in this sideways pattern here for a little bit of time. I will not want to go long gold unless we can clear the 1990 area. And if we take out this pivot high here, a little bit over 2,000, it's going to run real quick. My target in gold going out in time is around 2150, near-term target. Okay, and then we would have a little bit more of a sideways correction pattern. But that's kind of what I'm looking at for gold. Silver would be my recommended play because on a return on capital basis, you'll make more money in silver than you will in gold. It's a little bit more volatile than gold, but when things are moving higher in precious metals, I've had our members in silver over gold. Now, if we look at copper, copper's just been on fire. Now, this is a great home run trade for us. We got long copper back here in early April, and it's just been through the roof, right? And the reason why is obvious. As I said, China is really the only G20 country that could finish in the green this year, year to year for the annual GDP number, or a little over 1% from a revised downward 3.7% roughly. But there is the trend line. It's just riding it nicely. We've had members made a killing in copper futures. Now, for those that couldn't trade copper futures, the proxy was Freeport-McMoRan. Same chart. Got in around $6, $6.20. Now it's a $17 stock, right? Almost a triple. Really been a great trade for us. So for you members following along, really good. If you're not a member, I highly encourage you to come in because we're trading all these things. And there's great trades across the commodity market as well. Some of you are just missing. If we take a look at energy, oil has been a good sideways chart. See, it came right down, bounced off my support zone here. I think it's still upside is limited. Downside is limited, and for those you option traders out there in our group, these are some great trades. You have to go out a couple of months to trade back month futures in the oil market, but there's some really good trades to take with minimal risk. Okay, and with the ever since oil went below the zero rate and people got wiped out, it's moved back up. OPEC is working very hard, intelligently to create an equal supply versus demand equation, and they're getting very close. So I don't see too much upside. I don't see too much downside. So just some opportunities in the oil market. Nat gas. I was expecting nat gas to pull back, make another run, and then roll back down. So I was looking to short at a higher level. Well, as it turned out, nat gas just gave it all up and came back down. So there's really not a trade right now in nat gas. Now, if it can climb back up and take out this 2.7, now I'm interested in shorting it to the downside. All right. But I don't see a trade in nat gas at this time. Other trades that in the commodity market that have been very strong. If you take a look at corn, corn has just been through the roof. You can see here China's coming in, they're buying. We took out prior pivot highs. Wheat's even stronger. If you look at wheat, I mean, just boom, 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 all the way up. And if we look at soybeans, which is probably the strongest, they've been buying soybeans like crazy. Look at soybeans, guys. It's just China's just come in and buying. So it's starting to get a bit stretched to the upside. Let me just put it on a weekly chart here, because when they stop buying, it's going to come back down again. Okay. And if we look at these there's a key level right there around 1080, and it's at 1043 right now. Okay. So I do believe there's going to be some downside opportunity, but just a huge play. Once it took this out, it was off to the races. Not much in the meats. We are seeing some interesting things in sugar now. Sugar is starting to get a little bit of a run here. Let's put it on the daily chart. You can see, and sugar is a commodity that if it gets up high, you want to be on the short side of the trade. We took out this prior pivot, so it could run up a little bit. So we'll be looking for shorting opportunities in sugar. Okay. Now there are other things out there, guys. Members, we'll go through that this Sunday evening. If you're not a member, again, I highly encourage you to come in and take a look at it. Otherwise, everybody have a great weekend. Enjoy the weather. And members, I will see you this Sunday evening. Take care, folks. Ciao now.